Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
I don't know if you checked out shares of Fannie Mae and Freddie Mac. I mean, they are just soaring off the charts.
It's incredible too, and just given where they've come and gone and being in that conservatorship since the height of the global financial crisis.
Yeah, it's a really good point, and it feels like we need a little bit of a history lesson. The news that's got them moving, we've got Fannie Mae, it's up about 20%. I'm looking at Freddie Mac up about 22%, and this is after the administration is said to be preparing to sell shares in an offering that could start as early as this year, again, according to that senior administration official. With the latest on that, and kind of, as I said, a history lesson, Bloomberg TV and Radio, international economics and policy correspondent Michael McKee.
Bring in the old guy for the history lesson.
Well, it's not the old guy. Like a fine wine, Mike, you just get better and better. But no, there is history behind these two names in a big way.
Especially, you look at Fannie Mae, was chartered in 1938. It's been around for a long time. Freddie Mac came along in 1970. Stepping back for just a second, here's what they do. They basically buy mortgages from banks and mortgage lenders and package them into securities and sell them to investors. And that way the banks have more space on their balance sheets to make loans. And because Fannie Mae and Freddie Mac have sold these off to investors, who are anxious to get the yield on them, they can predict essentially what their mortgage costs are going to be, and so they can have keep mortgage rates generally fairly stable. Along the way, from the time Fannie Mae was created, they created the 30-year mortgage, which is, we're the only country that has something like that. But then, of course, they bought a lot of really bad mortgages in the run up to the Great Financial Crisis, and basically went bankrupt, and the government had to bail them out, and they did, and have put them into conservatorship is what they did. But the way they did it was they still left shares outstanding. And so a lot of hedge funds got into the business of buying up Fannie and Freddie shares at pennies on the dollar, and have been sitting on them for 17 years now. And the Biden administration and the Obama administration had no desire to bring them out of conservatorship, but the Trump administration seems bound and determined to do that. They've been talking about it since he came back to office. It's complicated. It will be difficult. But boy, if you were Bill Ackman or John Paulson,
pretty happy today?
You're pretty happy today, yeah.
Well, Trump also met with the CEOs of Bank of America, Citigroup earlier this week, and then last week Bloomberg News had reported that he met with Jamie Dimon and David Solomon over at Goldman Sachs Group. So I'm wondering, how difficult will it be to pull off a potential feat here when we're talking about an IPO?
Well, it's not so much the selling the shares, although it has to be designed in a sort of specific way, because the government owns 80% of the shares right now. And one of the big questions is, are you going to put the companies into receivership and basically bankrupt all the existing shareholders, which is what you normally do with a company that's going to come out of bankruptcy? Or do you leave them with equity in the new company, and then they make a huge profit? But the biggest problem is that because they have been owned by the government, and before that there was an implicit guarantee by the government, rates were low. You didn't demand an extra premium because you knew that they were insured and they were going to get paid. You were going to get paid either way because the government would step in. And so if the government steps out and lets this be a private company, then maybe mortgage rates are going to go up. And things like the mortgage rate lock, when you lock in a mortgage, that could go away. So there are a lot of questions about how this would be handled, and that's one of the reasons it's very complex. Jess, you were talking about the banks meeting with the president. They're looking apparently for a lead underwriter now. This is going to be a huge sale, so they would, I'm sure, have a consortium, but somebody's got to be the lead. And not just Paulson and Ackman are going to make money.
Mike, I feel like so many things this year we are saying are complicated, but I do wonder that it would be a very different entity. Both of them would be different entities if they are publicly held and it's not that quasi public-private that we've seen, correct?
Yeah, and nobody quite knows how this will play out, because you would worry that rates will go up if they don't have a government guarantee. But does the government want to stay in the guarantee business if it's a private company? And we're basically subsidizing their low rates and their profits. So it's a tough call. This administration is very much a free market, get the government out of business stuff. So they're in favor of this. As are some of Donald Trump's biggest campaign donors, but it's not going to be easy to put it all together. And a lot of people in the mortgage industries have been concerned about this. I don't want to say they're worried, but they are concerned because they know it's a complex issue.
Complex, and so not a given that this ultimately plays out. Mike McKee, thank you, and not all just smart. That's why we love to have him on.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
All right, we're going to continue on the geopolitical because it really seems to be a major theme when we look at what's going on today. Joining us now is Wendy Cutler, Vice President of Asia Society Policy Institute. She joins us from San Diego. Wendy, so good to have you here. We just did kind of a rundown from our Jen Delowy in terms of all the stuff that is going on. I want that whiteboard, U.S., China, India, Russia, Iran. Talk to us a little bit about the news coming out of the news flow about geopolitics and the U.S. role and what they're trying to do. And maybe we start with Russia, because it is curious whether or not something will ultimately get done to end this war, because it does seem like President Putin is going to stand pretty pat when it comes to his demands.
Look, it's unclear how this is all going to develop, but it's clear that the president is very determined to use his office to try and broker a ceasefire. What I'm watching on the trade front, however, is how this may impact our relations with India right now, because we are in a 21-day period where the president has threatened to increase India's tariffs by an additional 25%, taking them to 50% due to their purchases of Russian oil. But perhaps if indeed there's some progress made with Russia, that will provide an opening to remove this threat and impending tariff hike.
Talk to us more about what this would mean for, say, India's relationship with Russia, or maybe even China's relationship when it comes to Russia as well.
Yeah, so for India in particular, look, we've spent 20 odd years trying to strengthen our relations with India. The past 2 weeks, the relationship has been spiraling downward, and it's going to be hard to rebuild. And I think in many respects, India is going to gravitate, not in a major way, but gradually more towards China and Russia, viewing us as an unreliable partner.
So that's what I want to ask you. I mean, I like to remind or have someone remind us about why it is so important that the U.S. continue to have positive relations and a positive relationship with India. Remind us about that and what would be at risk if India is much more aligned with China rather than the United States.
Well, we have looked to India as the counterweight to China, both on the strategic front, but also on the economic front. On the economic front, we have been encouraging our companies to leave China. And one of the destinations they've been gravitating towards is India. So many U.S. companies now are expanding their operations in India. If relations start going south, this is all kind of, throws things up in the air. And the last thing the U.S. business community needs right now is more uncertainty. There's enough uncertainty with all of these tariff announcements coming out on a daily basis.
Do you think there's been long-term damage with that bilateral relationship?
Absolutely. Again, you spend years and years building a relationship, building trust, but it can take just a matter of hours or days to break that trust. And so rebuilding it is not going to happen in a matter of hours or days. And we're not just seeing this with India. I'm just back from Japan, and I'm kind of hearing the same thing, that, the Japanese have been a very strong ally, are looking at the past couple of months and how they've been, in their view, kind of jerked around in these trade negotiations, and are also talking about developing some kind of plan B where they become less reliant on the United States. So this is long-term implications, and again, hard to rebuild trust in a short period of time.
What has happened here? Because when the president came back to the White House earlier this year, he did look set to build upon kind of the warm ties he had with Prime Minister Modi during his first term. He had called the relationship the best it's ever been between two leaders of the two countries. And the Prime Minister called President Trump my dear friend. Is this just, I don't know, gamesmanship? I try to kind of understand what we hear, what we see sometimes, and then what's, a new set of headlines that shows something very different. So should we take this at face value that the relationship really is breaking down, or is it just the negotiating process between leaders of two really important countries?
Well, look, a few weeks ago, everyone was saying we were on the verge of an early trade deal with India. And there was a lot of optimism about that. And somehow the trade deal got derailed. It could be that the U.S. was asking for more, but a combination of India couldn't meet our last few requests, particularly in the agriculture sector, which is very sensitive for them. But I don't think that's the whole picture. Obviously, something happened that made the president extremely frustrated. Maybe he got the numbers of how much oil India continues to buy from Russia, and that, somehow rubbed him the wrong way. But again, the words he's been using towards India, I don't think this is something that you just turn around overnight. It's pretty deep right now. And if you talk to the Indian officials or the Indian public, I think that there is a lot of deep-seated anger, and frankly, they don't really understand how this spiraled down so quickly either.
What are your eyes on next when it comes to a timetable? I know August 12th, that's that deadline for the decision on Chinese tariffs coming up soon.
Exactly. Next Tuesday is key. I'm counting on that we will roll over the tariff truce that we achieved with China 90 days ago. And then I think we are going to see a continuation of negotiations with China to try and see if we can do some kind of deal with them in the lead up to a possible meeting or visit by the president to China around the Korea APEC meeting in late October.
What I wanted to ask you is, just to kind of wrap up here, Wendy, and again, devil's in the details. We'll see what ultimately happens. And whether or not they come back to the table and they become friends again. But I guess if there is a broken relationship, which is how it seems right now, and that lasts longer term, what's the cost to the United States?
With India?
Yeah.
Yeah. Look, the cost is, we have damaged a relationship with an extremely important partner that is only becoming more important on the global stage, and particularly at a time when we want to diversify away from China. This does present serious concerns.
How much is China watching this, in your view?
Oh, very, very closely. And I would expect that China is going to make overtures to India right now in an effort to bring India more in their camp. Now, let's keep in mind, though, China-India relations historically have never been good. And so I don't expect India to move to the China camp. But again, I think they're going to hedge their bets and view the U.S. as less reliable and gravitate both towards Russia and China, frankly.
And even that they could possibly talk, or that we're even talking about them possibly talking, just shows that things could possibly be shifting. Wendy, so glad we could get some time with you on this Friday, a very, very busy Friday, certainly when it comes to geopolitics. Wendy Cutler back with us. She is Vice President of Asia Society Policy Institute, joining us from San Diego. Wendy, thank you again.
This is the Bloomberg Businessweek Daily Podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
We're going to go back to geopolitics, although this really plays into geopolitics as well. We're going to get to Israel saying it will take control of Gaza City. It's a move that could displace 1 million Palestinians leaving there. Let's get to the latest on what we are seeing, what we are hearing. Bloomberg News Jerusalem journalist Dan Williams is in Jerusalem. So, Dan, what are you hearing about new moves to take control of Gaza? What are you seeing in and around also?
Right now, it's declarative. As you all have read on Bloomberg and elsewhere, the Israeli Security Cabinet, that's really the top decision-making forum of the country. The War Cabinet, if you like, decided after a night-long debate, 10 hours behind closed doors, a 4 a.m. resolution that they would order the storming of Gaza City as part of Israel's efforts to end this war with what it would define as a victory against Hamas. Now, Gaza City is part of the 25% of the Gaza Strip yet to be overrun by Israeli tanks and troops, yet to be under full control of the Israeli army. And moving against it would be a long process, weeks or months in the making. It would involve the evacuation, the forcible evacuation of potentially hundreds of thousands of civilians, and then presumably laying siege to the Hamas holdouts who are there. In the thousands, we're told, of Hamas fighters and also potentially hostages, which they're holding. It's worth remembering Hamas still has 50 hostages, most of them from the October 7th attack in 2023 that sparked this war. 20 of them are believed to be alive. Previously, the Israelis avoided entering these areas of the Gaza Strip for fear of endangering those hostages. It appears now the gloves are off, but with that said, this will not happen immediately on the ground. It will require apparently a doubling of the Israeli forces deployed. That will take potentially a week or two to muster in terms of reinforcements, call-ups of reservists. And that does actually leave a window for Hamas to think again about whether its tack in negotiated efforts to achieve a ceasefire, perhaps a negotiated end to this war, needs to change. So we will see. There are indications that Hamas is sending out feelers that it wants to renegotiate or review those negotiations. So until we see the tanks and troops moving, all bets are off.
Hey, Dan, how has the Trump administration responded?
The Trump administration has been openly supportive. We interviewed the U.S. ambassador to Israel just a few days ago, and the ambassador made clear that Trump, as he put it, is fed up. He actually said has run out of patience with Hamas stonewalling, as Israel and the U.S. have described it in those negotiations. And the U.S. wants to see Israel end this war. Now, for Netanyahu, the Netanyahu government in Israel, ending the war means winning it through force in the absence of negotiations. However, many Israelis, to judge by polls, would prefer to see this war ended by a review of Israel's objectives, basically abandoning the objective of destroying Hamas, of returning all those hostages in a negotiated deal that would keep Hamas in power. And basically what we have now is a government that's out of sync with its people, to judge by the polls, but insists that this is what the country needs to guarantee its long-term security.
Is it also a government that's out of sync with the region? And I just think about that, and also out of sync with the Abraham Accords, right? Which we know set a series of diplomatic agreements normalizing relations between Israel and several Arab nations, brokered by the U.S., the first Trump administration, the first term. So are they out of touch too with their partners and other Arab nations in terms of what they want to see done with Gaza?
Well, to judge by open statements, absolutely. The Palestinian civilian suffering in the Gaza Strip has become intolerable to many viewers, certainly in this part of the world, where it's become especially combustible in terms of public opinion. However, oftentimes what's said behind the scenes isn't the same as what's said in public. I'd remind you that some 10, 12 years ago, WikiLeaks revealed that what was being said between US-aligned Arab powers and Israel behind the scenes to US diplomats was very different to what was being said in public. In public, there was talk of Palestinians. Behind the scenes, behind closed doors, the real focus of the discussions was Iran. It's also worth remembering that to most assessments, Hamas triggered this war in part because it wanted to scuttle those Abraham Accords. Israel and Saudi Arabia were on the verge of establishing a peace deal. So there is that worth remembering. I think everyone would like to put this in their rearview mirror. The argument of the hawks in this equation is that the best way to do that is to defeat Hamas militarily, even if that requires weeks or a few months of intense pain all around in the very near future.
Sometimes we forget, war, but as you said, there are still hostages, Israelis who are held hostage by Hamas. There's also Palestinians who don't have any homes anymore. I mean, where are the residents of Gaza City supposed to go?
They will be evacuated, to judge by the previous course of action taken by the Israelis over several rounds of these moves into population centers. They'll be evacuated to an area called Al-Mawasi. That's on the southwestern coast of the Gaza Strip. It's a large area of sand dunes where the Israelis are convinced Hamas was not able to establish bunkers, underground tunnel systems, and therefore there's no direct military threat to concentrating people there. Effectively a very large tent city, a DP camp, if you like. Conditions there are not easy at all. It's worth remembering, though, that the Americans are now saying that they intend to quadruple in the coming 2 months. And I think in the coming 2 months, that's a time frame that's meant to work in tandem with the new Israeli move against Gaza City. They intend to quadruple the GHF, the Gaza Humanitarian Foundation. That, as you'll be aware, is a substitute aid distribution system set up by the Americans and the Israelis in hope of sidelining UN agencies, the traditional humanitarian network that they accuse of being too close to Hamas, effectively propping up Hamas rule going back years. So if the Americans manage to quadruple that GHF operating volume, it will go quite a long way to dealing with the immediate needs of those displaced people, but obviously living indefinitely in a camp that's composed of tents, knowing your house has been destroyed, not a pleasant prospect for anyone.
Dan, what's next, and what's the window for Hamas to achieve a ceasefire?
A ceasefire talk stalled a month ago, and I think the Israelis and the Americans have made clear that if they resume, the terms will be very different. What we had previously, and there have already been 2 ceasefires in this war, with partial hostage releases by Hamas in exchange for prisoner releases by Israel, increased aid. That's no longer the case. Those were largely instrumental. A ceasefire now would be existential. In fact, rather than referring to them as ceasefire talks or hostage talks, they'd actually be Hamas talks, because what's at the essence of the negotiations now is whether Hamas gets to stick around. What it tried to do is parlay another truce of 60 days that was proposed into an Israeli guarantee of an end to the war, a full withdrawal of Israeli forces. Israel refused that. It will not withdraw forces. It will not end the war until its objective of seeing Hamas gone is achieved. Hamas being gone means a total dismantling of the Hamas power structure, a removal of the Hamas arsenal, the exiling of Hamas leaders abroad. So what the Israelis and Americans have been saying is, you want more ceasefire talks, fine, but it's an all or nothing deal now, meaning a full return of all of the hostages, there's 50 hostages, and a full Hamas capitulation, meaning you agree consensually to give up your weapons, to give up power, and to leave quietly. It's basically the difference between forced out or killed in the course of battle or captured, and leaving consensually and abandoning power. Kind of a stark choice for Hamas. It's worth remembering this is a group that's shunned by much of the West as a terrorist group, and it's accused, including, by the way, in the Middle East, given a resolution passed by the Arab League just last week, of having needlessly started this war with a very significant attack on Israeli civilians on October 7th, 2023. I'm not sure there's much sympathy for them in the region and beyond. There's certainly a sympathy for suffering Palestinian civilians, but I think a resolution like that, where Hamas to surrender, would be welcomed all around.
All right. Thank you so much, Dan. We know it's later there in Jerusalem. Thank you so much. Bloomberg News Jerusalem journalist Dan Williams in Jerusalem.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Man, it's been a busy week when it comes to earnings. Pinterest, Trade Desk, Expedia, Zillow, Lyft, Uber, DoorDash, Duolingo, Mountain, Spotify, and then the week before we had Booking, Amazon, Meta, and Alphabet. The next guest covers all of these companies. He is someone that is a must-read on Wall Street, closely followed certainly by our Bloomberg community. Mark Mahaney is Senior Managing Director and Head of Internet Research at Evercore ISI from San Francisco. He's also the author of Nothing But Net, 10 Timeless Stock Picking Lessons from one of Wall Street's top tech analysts. Mark, really great to have you with Jess and myself. How are you?
Hey, Carol, nice to hear your voice. Nice to see you.
Yeah, same here. I mean, it's been quite a week. I want to ask you just kind of big, broad macro, because it seems like so much of our world is being upended, or at least there's some uncertainty, certainly when it comes to various policies. Tech companies, sectors, overall definitely called out by the Trump administration. We've seen Apple's Tim Cook at the White House. We've had the Intel CEO just this week being called out in a negative way by the president. This administration, how do you think about it broadly in terms of policies and acts and actions that are impacting, could impact the technology industry and the investment potential?
Well, shoot, I could think of a lot of different answers to that question. I think the facts are this is the most activist administration when it comes to business, maybe since FDR. I don't know. I'm a student of U.S. history, but you're stretching me there. But yeah, this is an extraordinarily activist administration. Anyway, so I guess that's one. And maybe the most obvious factor is tariffs, which are, at the end of the day, a tax. And so somebody's going to pay that tax, and it's either American businesses or it's American consumers. So yeah, that's out there. And then, yeah, there's a lot of pressure or attempts to influence these companies. So that's out there too. Look, all of that's part of the backdrop that all of these CEOs and these executives have to deal with. They're paid to deal with these kind of challenges. It's just unusually high, in this administration. The backdrop to the tech sector, however, there's some other things that are well within their control that are really lifting, what's a 3-year bull market now in tech stocks, and that's it's Gen AI and what we're seeing in terms of reduced costs and improved processes and improved products and solutions and offerings. It's really, we're going through a major super cycle here when it comes to Gen AI. I know it's been overhyped at times, but there's a lot of reality behind it. And there's some companies that have had really good stock price performance precisely because they're perceived as Gen AI winners.
That's right. And of course, when you're talking about AI, I have to bring up semiconductor and chip maker stocks. When you think about the juxtaposition between former President Biden's types of policies versus President Trump's call just recently for 100% tariffs on chips coming into the U.S., will all of this make for a more robust, domestically located semiconductor industry? Or is that really possible? Break that down for us.
I'm not sure I've got a really thoughtful, educated answer to that question. You're asking you're asking whether if you want to promote U.S. manufacturing, particularly in what are considered to be highly strategic industries, whether it's better to use incentives and subsidies. I think that crudely explains the Biden administration policy, or whether it's better to use, tariffs and browbeat companies to come back into the U.S. And I'm not sure. I mean, they're both active government policies into businesses, and so I'm not sure. It isn't just an interesting step up. I mean, we had a laissez-faire, economy. Generally, government stays out of the way of business, and we've had a lot of look. I'm out here in tech land. Most of these companies are out here, and they've been very successful, run by entrepreneurs. They come from different parts of the world. They come to California area and other parts of the U.S., and they create these extraordinary businesses, and they've done it on their own. I mean, there's always some help there, but they've pretty much done it on their own, and I think that's actually created a really good situation for people in this country. I hope we don't spoil that.
Well, let's get to some of the numbers that we got this week and certainly the week before. I caught some of your calls following the updates. Zillow was out this week. You raised your price target on it. Uber, too, you raised your price target on that one to 150. DoorDash, you upped it to 360, the price target. What companies' results showed to you kind of a more interesting investment thesis as a result, either this week or last week when we got some of the big major tech names?
Well, I like to set up on a question. So where I thought we had some just really surprisingly constructive, positive results, I thought DoorDash was in that list. We had some record high operating margins out of that company. Meta was definitely in that list. And most of the other names, I thought those are kind of two standout companies. Maybe Booking.com was in that list too. The other names, we had some good prints out of names like Google. We had some good prints out of names like Amazon, but the really strongest, kind of cleanest prints, there were a few in there, and I would put Booking in there, DoorDash, and those would probably be at the top of the list. And if you just step back, because we started off talking about some of these macro concerns, and these companies give you a very broad read into the economy. They do, into consumer demand, into some enterprise demand. And if I'd use one single word to describe the results of this earnings season, it's resilience. It's not like we had a positive inflection, although there are a few cases where that happened. But generally, the overall view is that spend has been relatively resilient, and it's at a relatively robust level for these companies. It's this may change in the back half of the year, but so far so good.
Mark, you're comfortable with Meta in particular. I mean, we had some news today, too, that they have selected PIMCO and Blue Owl Capital to lead a $29 billion financing for their data center expansion in rural Louisiana. It's all about the race for AI infrastructure. We know that. This is, according to people familiar, that major mega spend and the talent grab and what they're spending for AI talent, Meta, you're comfortable with all of it?
Well, I guess if they keep putting up prints, if they keep putting up fundamental results like they are doing, where they're using AI to improve their cost structure, but also to improve their products, like you're getting an ROAI, return on investment, ROAI, return on all that AI CapEx spend and OpEx spend. They took their revenue growth and they re-accelerated it despite being at the scale that they're at, 150 billion roughly revenue run rate. They took their revenue growth and accelerated to 20%. That didn't come out of nowhere. They were using AI to better target ad campaigns, and so marketers are getting a better return on their Meta ad spend, and consumers are finding the service better. I mean, the evidence is that they're spending more time with Meta, they're spending more time with Instagram. There's nothing more objective than just time spent. So Meta's been able to use all that AI investment to improve their product, improve their service, and so if you keep doing that, you absolutely you earn the right to spend more, to invest more.
All right, we've got to run, unfortunately. Thank you so much. And I really appreciate you going macro with us and then also drilling down a little bit on some of the companies. So appreciate it. Mark Mahaney, he's Senior Managing Director, Head of Internet Research over at Evercore ISI, author of Nothing But Net, 10 Timeless Stock Picking Lessons from one of Wall Street's top tech analysts, joining us out there out west.
This is the Bloomberg Businessweek Daily Podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.